All right, so you're in the process of your mortgage loan and it's time to order the appraisal. Now you may have questions like, what is an appraisal? What does it help with? Why is it even required? Well, I'm here to answer those questions for you. I'm Gabby Letourneau with loansbygabby.com and Ameris Bank. Now, if you don't know what an appraisal is, it's a report that's used to estimate the current market value for something, which in this case, that's real estate. Now, I require an appraisal as a lender so I can make sure the property's actually worth, at minimum, what it's being sold for. It's not in the best interest for anybody, you as the buyer, me as the lender, to lend money on something that's just not worth it. That could be like me saying, I'll give you $20 for a carton of milk. Now, of course, just like with anything, there are pros and cons of an appraisal. Now, since I tell the bad news first, let's start with the cons. An appraisal can break a whole deal. How so? Well, if the appraisal comes back under value, then the appraisal is saying the real estate's just not worth what you agreed upon to buy or sell it. Buyers may now need to back out of the deal because they either A, don't want to pay more for something than it's worth, or B, they just don't have the money to pay in cash the difference. Now the difference, what do I mean by this? Let's say you're purchasing a property for $450,000, but the appraisal comes back at $425,000. That's a $25,000 difference in the contract price versus the appraised price. Now, as a lender, I'm only able to lend monies on the appraised value or the contract price, whichever is less. In this case, I would loan off the appraised value. Now, if the seller does not want to drop their price to $425,000, which would be market value, then the buyer would need to come up with the difference of the $25,000 and bring it to closing. Now, if the buyer does not have an extra $25,000 to bring to closing, then they would have to walk away from the home. All right, so bad news is out of the way. Let's talk about the pros. Using the same example as before, you're under contract for $450,000 and the appraisal comes back at $460,000. Now you now have an additional $10,000 in instant equity in that home. Now, as a buyer, the appraisal is only for you. It's not for the seller and it's not for the realtor. It's for you and me as the lender. You do not have to share the appraisal with your realtor or with the seller of the property. Only you and me as the lender need to see the appraisal. Now, what you can do is you can tell your realtor that the appraisal came back good, it's at value, and we're still going to move forward. If, for some reason, the appraisal came back under value, that's when you reach out to your realtor. You can share the report with them, and it's best to share the appraisal report with your realtor if the appraisal comes back under value, so they can help you negotiate the purchase price. Even if you're purchasing with cash, it's still a good idea to get an appraisal done to cover your bases and make sure you aren't spending more than the property is worth. Now, I hope I cleared some things up for you. Again, I'm Gabby Letourneau, the mortgage lender that works with you. If you haven't been pre-approved yet, I'd love the opportunity to work with you. Just go to www.loansbygabby.com, or you can reach out to me via my phone or email. All my information is below. Now, if you want to buy a house in the future, whether it's your first home purchase, your second, or your 100th, I would still love the opportunity. And please subscribe to my channel to stay updated with information. Bye, guys.